lead manager of the Purpose Tactical Asset Allocation Fund, a really unique asset allocation strategy that sits somewhere in between equities and bonds. We have Craig here today to talk a little bit about the strategy and how it fits inside of a portfolio. Craig, can you tell us a little bit about the Purpose Tactical Asset Allocation strategy?
Yeah, this strategy, which we actually created, I think 11, 12 years ago now, was really born out of the essence that we believe people's asset allocation should be based on their long-term objectives and goals and risk tolerance, but you should have a certain amount of tactical component where you're sometimes a little bit more into equities, sometimes a little bit more into bonds, and it really comes down to how to implement that kind of strategy. And we put this strategy together. It is a rules-based approach, so it largely removes emotion from the decision-making process, and it is a momentum-based model. So if equities are moving higher and trending better, it leans more and more towards equities. When equities start to soften, it leans more and more towards bonds. And what it's really designed to do is provide a rules-based tactical component to somebody's portfolio, in the sense that combined with their overall asset mix, when things are doing better and the markets are going up, it tilts the overall portfolio a bit more towards equities and a bit more towards bonds when things are in more trouble.
And how would an investor think about this, and where would they place it inside of their portfolios?
Yeah, it does have some characteristics that are like some of different alternative investments out there, although we're not an alternative, we're a full prospectus fund. We own plain vanilla ETFs in the market. So most people allocate it as if it's a balanced fund or a balanced strategy, acknowledging the fact that even though it is a balanced strategy, sometimes it can be as much as 80, 90, 95% equity, and other times it can be as little as 10, 15, 20% equity and the rest in bonds. So it is a very active strategy, and we don't think anybody should change their overall asset mix to that degree, but we move a lot so that putting a small allocation within the portfolio can provide a bit of a stabilizer, but then also capture a reasonable amount of up markets whenever they do return.
Exactly. I think knowing about the strategy and how I look at it from a portfolio implementation standpoint, I find, leaning more into it when equity markets seem a little bit frothy could be opportune times. We've seen a great run here off the bottoms, up nearly 10% in the last 30, 40 days or so. Could be an interesting time to take a look at a strategy like this. What type of performance outlie should an investor expect from the strategy?
Yeah, I mean, we've been running it for about 12 years now. It's been in fund format and ETF format for about 6 years now, and we're high single digits annualized returns, and in our category, which is the tactical balance category by Morningstar, we're now top decile over the last 3 and 5 years. So it has done what it's designed to do, and it's a more conservative strategy. So if we have a huge roaring equity market, we'll capture a decent amount of it, but not all of it. But more importantly, if we have economic weakness and translates into stock market weakness, we do provide a fair bit of a good stabilizer for a portfolio.
And what's the fund code so people can check this out and take a look for themselves?
Sure. The ETF is RTA, and the fund code for the F-Class series is PFC 3901.
Awesome. Thanks for joining us this week.
Thanks for having me.